All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and just briefly wanted to say thank you everyone for the subs. So, Dylan and I are very enthused about the growth of this channel. This channel is growing better than Dylan's portfolio.
Ooh,
I know, shots fired early.
Numbers would differ. I'm going to have 100% return in 2021. I'm calling it right now.
Maybe
100.
I love it. So today we're actually going to follow up in my kind of margin of safety analysis, and I want to talk about Facebook. Interesting company, something we all use, well, many of us use on a regular basis. I mean, they're pushing 2.7 billion daily active users. It's insane how large this company is.
Yeah, it's not only that, they also own Instagram and other social media stuff.
WhatsApp, yeah. I've only used WhatsApp once, but I guess it's pretty commonly used outside the United States. Anyways, but I want to talk about a little bit of a value analysis on them and see do I think they're worth buying at this particular point in time. So kind of in line with the channel growth there, one of the things I do want to say is we appreciate the subscriber growth, but there's still a lot of you guys that aren't subscribed, so we'd greatly appreciate it if you could go ahead and hit that subscribe button down below.
If you made money, I'm
Exactly.
cool with that.
Yeah, I agree. So it's interesting. This is a 5-year chart of Facebook right now, and it's hard to think of a company that is all the way up here, the all-time high. Could they still represent a good value? What do you think, Dylan?
I mean, actually, they've been cut from my top 5 stocks for swing trading 3 weeks in a row, and they have continued to go up. So I had to put that in there. Honestly, they're killing it. They're really not. I'm gonna bring up their stats after you do this.
Yeah. So this is from their 2020 annual report. Basically, if you look at the top line here, revenue growth. This is dollars coming in the door. Basically, you're talking about growth from $27 billion to $85 billion. So it's just phenomenal growth. And as you actually watch here, the net income line as well, you're talking about 10 billion to 29. So, triple the net income over the last 5 years, basically. They are a cash printing machine to a degree. Let's look at their balance sheet. What are they doing with all that cash? Most of it's just sitting there in the balance sheet. They aren't deploying it to the degree that I'd like to see. They are definitely building up a large cash reserve, but that's a good problem to have. Too much money is a good problem. Warren Buffett would agree, right? It's still a problem, but it could be worse. And then if you actually look at their cash flow, when you buy a business, this is really what you're buying, right? You're buying this free cash flow. So you're talking about 11 billion to 23 billion. This $23 billion is basically represents money that they took in the door last year, and they didn't have to put back into the business in order to maintain the same level. This is money that they can use to grow. They can reward shareholders with it through dividends. They could do share buybacks with it. They can do purchases of other companies that they think will continue to grow the business. Although, for those of you that graphical representation is better, look at this chart. You see charts that beautiful?
That's all me. I'm a chart guy. That looks beautiful.
Pretty picture. It's almost like the computer generated, but no, Facebook generated actually. And then the same thing for their actual earnings. Same thing. Nice, beautiful, consistent growth. This is one I don't love to see. This is total shares outstanding. If you look at this, they're mostly flat. They issue a little bit in stock comp every year that they don't really buy back. So this is a target that if I were the CFO of Facebook, this is where I would be probably putting the excess working capital towards, is purchasing back some shares, increasing our net ownership of the business on a percentage basis through that action.
How much capital did they have?
In total, it was over 60 billion in excess cash.
Oh, just 60. Oh, okay.
Yeah. Well, I mean,
you could buy 6 EV startups with that.
Yeah. I mean, they might as well at this point compete with Apple Car. And the other thing I wanted to highlight here, so I don't know if you guys have probably heard of the FANG stocks, basically, high flying tech stocks. I wanted to compare Facebook to its peers in that realm. If you look at the current PE and then the forward PE, Facebook is actually the cheapest of the high flying tech stocks. Did you know that, Dylan?
I did not. I would have thought it was Apple, actually.
Yeah. I mean, Apple is not far from where Facebook is as far as that goes. I mean, you look at the forward PE, they're almost neck and neck. But in comparison to the other, tech stocks, they're still represent, I think, a relative value. Especially when you look at the overall market, the 41 PE right now. So a company like Facebook that is growing at a phenomenal rate being below average for the PE, like, well, that's weird, right? I mean, certainly there's some news stories and some antitrust questions that are part of that reason, but
Right.
So this is the same thing. This is the Phil Town earnings per share kind of calculating a margin of safety price. So I put in last year's earnings per share of $10, and I once again cut their growth rate in half. Facebook has been growing at over 40% per year for the last, I think, 3 years. So I cut it in half to 21%. Gave them a market average future P of 24. I used Phil Town's initial 15% minimum rate of return here, which 15% is above average for the market. Okay, like don't forget that. S&P 500 typically earns 7 to 10% depending on what time period you look at over the long term. So 15% solid, but that calculates a margin of safety price, which is at $201 a share, which represents a 50% discount from what they believe the company should be trading for. Now, I took that a step further. 50% is the old school, margin of safety number. It's hard to find stocks trading for that much of a discount. Although Alibaba was.
Yeah, Baba's at that number.
Yeah, Baba exactly is at that number. But I decided to go ahead and modify it a little bit and use a 30% margin of safety price, which is something that Buffett has done in recent years. And that calculates that out at a $282 per share price, meaning that, you don't have that great degree of buffer. If Facebook were to underperform significantly, more than 30% from expectations, then you would be in line with your prediction. But still not an unreasonable thing, especially given the general price level of the market you see these days and the froth that's out there. So, Facebook's currently trading at $298 a share. I did actually pick up buy some Facebook this week. Like I said, just for the reasons and highlighted so far in this video, and I, work my way backwards. So margin of safety calculation right there, actually getting about the, what's that, 25.9% discount from where Facebook should be trading based on its current earnings and its growth trajectory. So I think reasonable. Is this like a smoking hot deal compared to the Baba? Yeah. But it's certainly not a
compared to Baba.
Yeah,
no, but it's still a great deal.
Exactly. Yeah. Overall, still it's a very solid value for a company that is growing at a tremendous rate. And I kind of adjusted things a little bit. If you're looking at more of a market return rate, which is that 10%, like I said, was pretty consistent with the S&P 500. You're looking at a margin of safety price of that 50% discount at $314. So it's right in that ballpark where you're reasonably purchasing this company, for a 50% discount compared to where you'd expect it to be if we were looking at between a 10 and 15% rate of return, which is above average for the market. And like I said, it's a very achievable target for Facebook.
Right.
And that was pretty much it. I always want to say, I said, thank you guys for all the subs so far. And then if you're enjoying this content, please consider subscribing. Dylan, do you want to walk us through the what you're looking at
real quick? So the reason why I just pulled this up is their all-time high is sitting up here at about like 304-ish, 304 right there. My favorite pattern is when it tries to attempt, and on the third time it pushes through. So attempt, failed attempt, and then we're attempting here again. The reason why this didn't make my swing video is because it went up here on lower volume. So what I think is going to happen, and this is completely a guess, but I think it'll come back down to this 9 EMA around 290, which would be a great buy-in price. And then usually in the third attempt, it shoots through. So especially with the Qs rallying back to highs, we could see this at like 320 in like a month. So it's not bad.
So you would buy basically Facebook right now if it hit 290 a share, or if it broke through 304 and was making new highs.
If it hit 290, the reason why it didn't make my swing trade is the entry. The entry wasn't awesome because entries, it's smaller stop losses and gains. But long term, this is great. I think you can get a little bit better of an entry at 290. I think it'll happen. 292.
Well, I mean, I'm predicting this is going to be a $750 stock in 10 years or more. So I'm not
that's
too
the
worried
swing
about
trade in me. I'm worried about the $4.
Yeah. All right, guys. Well, Thank you for tuning in again. Like I said, please like, comment, subscribe below. If you have any suggestions for other stocks you'd like to see us kind of break down, by all means, drop them in the description. We'd love to hear from you.
Yeah, that'd be cool.
All right. Thank you.
Later.